Welcome to the official Moralis Monday Pro live stream. This is our community live stream where we get up to date on what's going on right now in the crypto industry and kind of prepare ourselves for what's coming. Now, I've been talking about Pi Network a little bit, guys, but basically there's concerns that there may be scams that the network itself may be a scam, or that there are too many scams centered around it to safely participate in it. Either way, we're going to leave that one alone. And suffice to say that even though it is in the top 15 right now over on CoinMarketCap, it's been around for a while, and it's not necessarily something that I personally expect to appreciate a lot from there. Of course, do your own research and make your own decision, but just a quick comment on that. I did check it out today. And it was a few red flags that I saw in addition to some warnings from members of our team internally. So that said, we're staying away from Pi Network. We're not going to be checking that one out together. Initially I wanted to, but now I'm shying away. And instead, we're going to take a look at a few other things that we're that we are actually exploring. And one of those is a reclassification of risk within crypto. So you guys have heard me in multiple videos talk about lending protocols. And you've heard me talk about the risk with the collateral being taken behind you. Now, I still actually would probably say that AAVE lending protocol is relatively low risk. But the problem is, when you receive a large airdrop and that airdrop is not stakeable, there's this huge desire to earn something from that while it sits dormant. Now, this happened to me with both the Arbitrum and Optimism airdrops. And with the Arbitrum airdrop, I deposited my ARB assets to a protocol called Radiant Capital. You guys have heard me talk about Radiant Capital. Well, they had a hack and they lost the collateral. So basically, I'm waiting to see how they plan to make me whole, right? Well, what's further unfortunate is I deposited my OP assets into a protocol called Sonne Finance. And Sonne Finance also had a hack and had the collateral stolen on the back end. Now, I was not born yesterday, guys. It could be that with some of these protocols, there's some collusion on the part of the admins, that they're actually committing crimes by taking the funds using the admin keys. Is this technically possible depending on how the smart contracts are written? Absolutely. I hope this isn't what's happening, guys. But the fact that I've seen this with lending protocols, like literally more than anything else. So you might see some odd DEXs out there, but typically DEXs are okay. You don't often see the DEX protocol liquidity pools getting hacked. Native staking protocols are rather uncommon to be hacked. But these lending protocols, I've just seen way. So basically, guys, what I have to do here is, with the exception of our blue chip lending protocols, AAVE, Compound, and maybe a couple others. Let's see what else. There aren't a lot, guys. We need to make this a short list of, quote, trusted lending protocols. But beyond that, I basically am going to have to classify everything in lending at like the second highest risk tier in my credit. So maybe not as high risk as like buying meme coins on the market and trading them. Like that would be one level higher, but maybe that high, because when your assets are completely stolen from behind you, there is a sense that you might get some reimbursement, but I'm seeing these reimbursement plans take longer to execute. Like I haven't really seen anything from Radiant Capital yet. And this situation is slightly complicated, guys, because I now have an issue with Microsoft's encrypted storage. So this is another warning. So as you guys know, I usually use hardware wallets, and the vast majority of my crypto assets, especially in terms of dollar value or Bitcoin value, is in hardware wallets. And that's how it should be for most of us, especially once you've started to accumulate a sizable supply. Use those hardware wallets and keep those positions simple so you can really secure those gains. That in essence is the core of the foundation of the pyramid strategy, is making sure that we can secure the gains that we get. So simply putting a little Bitcoin in a hardware wallet, just natively sitting there, is a good idea for that reason. And for that reason, I'm feeling okay today, guys. But I did have a software wallet that I had the seed phrase stored within my encrypted storage on Microsoft, within my vault, right, on my OneDrive. Now, the reason why I thought that this would be okay is because it's functionally the same as having it in any other encrypted storage, right? You'd need access to my account, and I thought you'd need access to my mobile device as well in order to access that. And furthermore, I was, only holding calculated amounts within that wallet. I may have had some strategies there I wish wouldn't have been exploited, but basically, when those keys were accessed, some of those funds were accessed. Now, the good news is I noticed this and I was able to respond and begin to move those over relatively quick and perform some remediation there. But what I'm realizing is that there isn't an effective way, even for our test amounts, to use anything other than hardware wallets and be absolutely sure about security. Now, of course, I'm going to file an incident with Microsoft. I'm going to take care of it on my taxes. And because I had my portfolio spread out the way that I did, it's an amount that I can essentially claim as a deduction on my taxes, get myself back to square one. So I'm not too concerned about it, guys. But what I am concerned about is making sure that we learn from this lesson and improve from here. And what that means is in every video I produce going forward, guys, I'm only going to be signing transactions with a hardware wallet, okay? Now, what I will do is take recommendations, suggestions on which one to use. And if it's a brand new network with a small amount, like $40 or less, I may break that rule. Okay. But generally speaking, I think that that's the best thing that I can do for you guys going forward. Somebody's asking about NEXO in the chat. Did you want to come on stage and talk about that? Because NEXO is like a anomaly, right? Unless they had a recent hack that I'm just somehow missing. NEXO is one of the ones that somehow survived all the issues. I mean, NEXO and crypto.com, those guys are still doing custodial services and offering returns like a bank on crypto assets. And I don't know that they ever lost anybody their money unless there was like a NEXO hack that just happened. No, this articles are from a year ago. Yeah, I mean, all this stuff is a while ago. And, missing funds, whatever. They're still operating. Let me know if you guys know something I don't on NEXO. Honestly, guys, I have an NEXO account. I have funds in there, but it's only NEXO assets because my thought is that if NEXO goes under, that their token will be worthless anyway. So it won't matter if I lent it out on there. But that's kind of like my exposure to their ecosystem because I think maybe it could have mainstream appeal, something like NEXO. I mean, I've often thought that, and years ago I would have recommended those things to people, but that was before the BlockFi collapse following FTX. Oh, interest rates on NEXO are at least double that of AAVE. See, be afraid of that, guys. And like, this is where we need to be talking about that because I think there's a lot of sentiment right now, and I'm going to see if I can pull up the chart that Theo was sharing here in the chat for you guys. Give me 1 second. I'm going to share my screen. I'll share it so you guys can watch along while I do this. Okay, here we go. Oh, apologies, guys. Let me just log in here because I want to share this separately. All right, perfect. So NFT Eve is asking about NEXO. Basically, people are saying like NEXO has better returns than AAVE. NEXO is a custodial service. NEXO is essentially a central exchange, guys. So there's nothing wrong with it, but you need to classify it as such. So having your funds in NEXO, that's like having your funds in Binance or Kraken. Now, consider the fact that FTX collapsed. Could Binance or Kraken collapse? Yeah, they could. And if you have your funds in there, You might get them back eventually, you might not. That's the exact same situation with NEXO. It's not the same as having your funds on chain. And so, you got to keep that in mind for sure. Oh, for borrowers? Oh, he's saying that the rates for borrowing are double. Well, that makes sense because they would have more overhead. So here's the thing about blockchain, guys. And here's why, like, you hear me talk about this almost every week, right? And I say that our industry is going to literally consume all of traditional finance. That's not just going to happen because we're newer than that. And it's not just going to happen because we will it to happen. Although I do believe the whole world will will it to happen at one point. But that's not really why. The reason why is it's literally more efficient and better. So if you're running something like AAVE and you're on all sorts of different efficient blockchains as well as Ethereum, then you are able to completely benefit from the fact that the transactional cost in these scaled environments is so cheap that it's actually less than managing a private database in some cases. Now, there's exceptions to this. If you're running a full node or a mining node for Ethereum, Binance Smart Chain, one of these major ecosystems, it could be that you have a sizable overhead. But that overhead is still not necessarily more and oftentimes less than running a central server that holds all your data, especially since you need high availability with that central server. So it's not just one server. It's like 3 servers in different places in the world. And all of a sudden you're creating your own redundancy. Well, the blockchain does that automatically. The blockchain's automatically redundant. It's built into the system as a function of how blockchains work. So why would you go and build out that redundancy? So NEXO basically needs to duplicate all of the beneficial features of the blockchain within a closed system. That all costs money. As a result, they need to recoup that money through the people that borrow money on their platform. So that would explain why the interest rates are so much higher, but why the returns for depositors aren't actually higher. They don't have extra money to give away just because the rates are higher. They need that for operational costs. I hope that answers your question for anybody who's curious about that. And let me know if you have any follow-up questions to that. What I wanted to show you guys here is, let's see, where did he post that? Maybe it was in the, I saw this post from Theo the other, oh, here it is. This is the one. This is perfect. So guys, a lot of us believe we're right here. And I don't want to argue with that. I think that's great if that's the case. It likely is. If that's the case, then we're experiencing like basically the most extreme fear of this cycle before it finishes. So if it feels really bad right now, that makes sense. And that's why this is the time where we really need to be careful about a lot of different things, because now, and then I want to talk a little bit more about the hacking thing. Now, hopefully you guys aren't targeted as directly as I am. When I was investigating this exploit of my Microsoft account that affected that one test wallet, I found out that dozens of times a day, people attempt to, from IPs all over the world, to log into my Microsoft account. In fact, it's probably happened 4 or 5 times since we started talking here. It's insane. And so now I got a bone to pick with Microsoft as to why would you deny access to all of these people, but then all of a sudden you let one in? And then it says like suspicious activity. The point is, this is the old order of trusted authority, which fails all the time and doesn't do a good job, coming to head with blockchain. And at the end of the day, the vault is mine. I had a test address where I had the keys in a what I thought was a secure vault. So so much for the Microsoft Vault. And did I at some point kind of know that this could happen? Absolutely, I did. And that's why it's like, all right, well, we'll deal with it from here. But I think it really helps to illustrate how this old system of trusted authority is completely broken anyway. And it doesn't really help to keep us safe from anything. Now that said, we also need to be careful about what dApps we're interacting with on chain. Now, in my situation, I didn't have any problem with having to revoke authority from any of the dApps I was using on chain. And so instead, I was able to focus on just moving those assets out of the wallet. That's another advice that I want to give you guys. And this was something that I was surprised to see. So this person had exploited one address. So I don't even think they had the full keychain. Maybe they did, depends on what wallet they opened on this. But I think they probably only had the private key and nothing else. And if they only had the private key and nothing else, then they're only able to get the networks that are on that exact address. But the truth is that this exploiter wasn't even concerned with most of my test wallets, which is why it wasn't that big of an exploit at the end of the day for me, because there were networks like, for example, Mantle, that they just really didn't touch the assets over there because I was so, far spread out across all these different networks that it wasn't worth their time to go through and extract, a little bit of a test amount from each one, which also sort of helps to justify that test strategy that I've showed you guys before, where we start with those smaller amounts, or even having a dedicated test address at the end of the day was really helpful to me because I didn't have, a whole host of other assets exposed to what's going on. And of course, I'm in the process right now backing up anything I stored to OneDrive, and we're done with OneDrive forever at this point. And lessons learned there. But it also starts to make me wonder, maybe some of these use cases that in blockchain were maybe just too early could see a reemergence later on. For example, I have, as you guys know, and this isn't something I would necessarily say when I'm walking around out in public, but talking with you guys, our trusted community, who already knows this because you've seen my video on it, you know that I wear a Tangem ring. Well, this Tangem ring doesn't have a seed phrase at all. And I think I may have actually underappreciated that security feature, especially when it comes to long-term storage. Now, when it comes to my test wallet, what happened. And yeah, I'm probably going to try to use hardware wallets again. But the truth is, when it comes to some of these smaller test accounts, will I eventually start using a software wallet again, just because I run into issues with the hardware wallet? I'm only working with $20 here, $25 here. Yeah, I probably will. And that's why keeping that isolated is all the more important. What I'm starting to realize in this industry, and I wish so badly we were past this point, but guys, I don't think we are. Your account, any vulnerability that you have in your accounts will be exploited eventually. And that's something that, while I knew that in principle, it's always a little humbling. Even if you lose $10, let's say you had a $10 bill in your pocket and you're walking along and it falls through a hole in your pocket. Even if you lose $10, it's, you wish you hadn't. And that's kind of where I'm at with this right now. So I want to be able to help you guys to potentially overcome that for yourself going forward. So if you're not already using a hardware wallet, number one thing, they're asking, how do you back up the Tangem wallet? So the Tangem wallet, you can create these backup cards for, and that's what I do. So I've got the ring that I wear, and then I have two cards that are the backup cards for it. And that system works pretty good. I mean, is it fundamentally any more secure than generating a secure offline pass seed phrase, writing that seed phrase down without using the internet, and then putting that in a safe? No, they're pretty similar. But it forces you to not have that seed phrase anywhere. And if you like that, I think it's a good reason for it. Just so you guys know, I mean, I like Tangem's product. It couldn't be my only wallet though, because it's a little bit clunky to sign some DeFi transactions with it. I think I find it easier with the Ledger or the Trezor. And I would end up using one of those as well for that reason. Now, for long-term storage, I like it. I like the Tangem solution a lot. I see Hatham saying the same thing. Yeah, it's good. It's good. Now, so guys, that said, I'm gonna move. If you're following any of my main test wallet, you guys know which one it is. This one right here. I'm in the process of migrating a lot of funds, so just keep that in mind, guys. Anything you see in here, potentially, getting migrated here soon. But we're gonna, this is giving me a good opportunity to kind of reevaluate where I'm at. And I'm gonna encourage all of us to do the same thing. Because if we're right here, this is the steepest upward pattern that there is in the cycle. It's steeper than anything here. And of course, it's steeper upward because all this is downward, So, given we're at the precipice of the steepest upward pattern, the best thing we can do right now is to make sure that our assets are not only secure, but well organized and ready for the next leg up. And it's a good time, I think, to write off assets and protocols that we think are probably not going to go anywhere. And that could be meme coins, things like that. It's a good time to wipe your mind clear of those, because that doesn't mean that you don't check up on them later. One thing you could do is you could transfer them all to a separate wallet. So you could have like this meme coin wallet and you just throw all your old memes there. And then you kind of monitor the balance using any number of different tools that can monitor. You can monitor it using Moralis.com. In fact, I'd encourage you to use Moralis.com for it. If you see one of those moon, well, then sell it real quick. But if it doesn't, you leave them all alone and you can just keep throwing other stuff there. So that's something that I may actually demonstrate for you guys in the course of this migration. And especially with respect to some of the networks like Base, where we were executing a lot of meme coin strategies, and some of them paid off, but some of them didn't, and things like that. All right. So on that note, guys, I want to pull up some of the headlines that Theo sent over to me here as well for today. And if anybody has any questions, networks, topics to bring up, security questions, of course, welcome as well. Come up on stage. I'd love to hear from you, or shoot a question in the chat. Oh, here's Bridgeforth. Hey, Bridgeforth, how you doing? Your mic's muted.
Okay, how about now? Can you hear me now?
I see Bridgeforth. So, okay, here he is.
Can you hear me?
Oh, let me one more time. I think I might have had my speakers.
Okay, can you hear me now?
Yeah, I can hear you now. Perfect. How are you doing today? Welcome to the stage.
I'm doing great. I hope you are as well. And I was super interested in your analysis. We're on the precipice of a big move. What are your markers on that are making you, and do you have a timeline on that?
So, the main reason why I would say that we're on the precipice of that is because the activity on the activity across networks in general, and especially the behavior surrounding new ecosystems and new chains, is very much alive. It doesn't feel like a long bear cycle in that sense. Now, I could, of course, give some examples to that. And no, I'm not going to be able to show you exact figures that prove we're right there. There are some people who are doing statistics like that in order to say, okay, we're right here and things like that. And is it possible that we're in a complete? So here's what I would say is the least likely possibility. I think the least likely possibility is that this cycle is going to prove to be a lot like other cycles that we've seen, and we've already topped it. That I don't think that there's sufficient evidence to suggest that. Now, is it possible that this cycle will behave completely different than anything we've seen before, in that it will have neither the depreciation nor the appreciation that we've seen in the past. That may be possible. If that happens, though, then it's sort of anybody's guess where we go from there. I mean, what if we went sideways for an entire year from here? We will have done something which our asset class has never done in the history of crypto before. And in fact, if it went sideways for an entire year, would we be more stable than the stock market after a year? And it would be the first, there's too many unknowns in order to make a proper prediction about where we're going in the short term. Now,
sure. Now, here's why I asked. I'm far from very good, very far from very good at TA. However, I've been following and paying very close attention to Brian Bemash, who spent, I guess, 30 years on the trade floor, and he watches both markets super, super well. Now, he's not as interesting as a lot of the popular influencers, but if you look back on his track record, he's almost always correct. And what he does is he looks at three reasons for a trade. And if he can't find three confluent reasons, he never relies on one indicator. And so what he's seeing, just to put it out there, is that like you, he believes we will have an upswing, but he thinks we might be sort of sideways until May, and then we go down, kiss 65. And the reason he says we're likely to do that is he tracks institutional money, and that does make this cycle different than many others. And there are indicators, and apparently there's a bunch of shorts that are institutional in nature, and they're going to get relieved at 65, and then they can get their money for the big up. There are further shorts even further down the road at 40. So he believes that the way the thing is going to go is sometime around May, we come down, kiss 65, everybody freaks out, a lot of people get shaken out, and then we go for a huge run upwards, and then we have another situation where we come down, kiss around 40, 45, probably 45, and then go for the last big hurrah. Regardless, um, I'm more in a cash position right now. And so I just wanted to put that out there as an alternative. And the second thing is, remember we were discussing the safest place to earn a reward on cash. And I think you kind of recommended AAVE as at
I
least.
still like AAVE for that. I think
Yeah.
that's fine. I think that's fine. But so if last week I would have said AAVE is like B plus safety rating, and then I might have said, other lending protocols are a B minus. Today, I think other lending protocols are a D minus, but I'll still give AAVE a B plus.
Well, here's
It's
what I
been
found.
around the longest, and it's proven to be secure.
I found something fascinating. I had most of my cash situation over on MakerDao, the original one, because it just seemed super safe. And last time I checked, it was about 4.5 or so. Most of the stablecoin situations on Aave are a little bit less than that, and you have to put your money into their hands. But you're kind of doing that with MakerDao as well. They give you a NFT back. But the main thing about MakerDao is it's been going since 2017 without problems. In the meantime, I think I discovered something better. If you have um, a choice of stablecoin, at least in my book, the one that has proven itself the best is USDC. And I say that because back in the last banking fiasco, they actually bailed everybody out before the government stepped in. When stablecoins dropped over the weekend, they announced that they were going to bail everybody out, even though the USDC had dropped by close to 10%, I think corrected a bit. And eventually the government did bail out the members of that bank. It was I forget the name of it. It was the woke bank in California. But in any event, USDC has very deep pockets. They're owned by Circle. So it's the stable coin of choice for me. Having said that, it now turns out that if you put it on a hardware wallet, which is the safest place you could put it because it's in your account, and you access that hardware wallet through the Coinbase Wallet interface, but the money's still on your wallet, Coinbase has no control, then right now Coinbase will pay you 4.1%, which is insane.
Really?
Yep,
They'll
I'm
pay
going
it
to
on
be
the
moving my money there today, and I'm thinking about
perfect.
even getting off of DAO as well and moving that money over there.
Yeah, I mean, so I would consider USDC um equivalent to US bank deposits. And that statement can only be properly understood in light of recent bank collapses. You see what I'm
Yeah,
saying?
sure.
So considering that a bank can collapse, and will the government probably break their own rules and bail them out to 100% of the dollars anyway? Yeah, probably. But that's breaking the rules. I don't think that USDC is any less safe than bank deposits.
Right.
And it's proven to be the case. And furthermore, the majority of USDC, if not all of it, is actually backed by bank deposits,
Right.
and it's fully regulated because that's a US company that issues it.
Now here's the other thing.
Different than Tether and that.
Coinbase Wallet operates on like 20 chains. That means if you have USDC on, I don't know, pick your chain, they will actually pay that 4% interest as well on that, 4.1, and they typically pay it in one lump sum by the 5th day of the month but they say between days 5 and 10. And if you've withdrawn your USDC in the meantime, you still get credit for, just like a savings account. You had it there for a little bit, and so you get that credit. You don't lose anything, so you have full control of your money. Nobody can ever hack it. It's earning 4.1%, which is certainly better than most banks, and you still have it in the crypto system. And it's
Now, are you following a guide for this, Bridgeforth, that you can share with us? Because I'm
um,
curious to look into it more. I didn't realize they would pay returns on on-chain assets.
I have, well, I'm not where I can get to it right now, but I have it on my laptop, and I can send
Well,
it to
when
you
you get
by
a
DM.
chance, send
Yeah,
send me a DM, and then I'll share it with everybody else.
right. But if
Because
that's
yeah, that's
true,
great.
I
I didn't
can't
know
see a
that
reason.
they would do that.
Yeah, well, here's why. In other words,
Well,
if
it makes sense because they're holding the dollars anyway.
yes,
It
and
doesn't
so
functionally matter.
if they can
Yeah,
earn risk fairly risk free more than 4.1% on their dollars, then you've taken those dollars off the market and allowed them to sit in their account. Maybe they're earning 4.4, 4.5, which is probably something that's capable if you're Circle. And then they're giving 4.1 back to us for just not moving the money.
absolutely. That makes sense to me.
And I could not imagine anybody but Circle being safer because they've already proven themselves by fire. When the stablecoins lost their money, DAI, USDT, and USDC all fell, and USDC was the only one that said, "Hey, we're going to make things good," before the government stepped in.
Yeah, I'm
And it was
I'm pretty
Signature
much
Bank. That was it, Signature Bank. If you go to
yeah.
YouTube and you Google Signature Bank commercials, you will see stuff that will make your skin crawl. You will cringe because it was all about politics and wokeness and everything else.
Okay, yeah, I kind of remember this. This is from a long time ago.
Right. And it happened over the
Yeah.
weekend. And I was the stupid idiot that sold off my USDC at a 10% discount to go into
Yeah, okay, I
cash.
remember that.
Yep. Oh,
Yep.
anyway.
Yeah, no, mad respect for what you're doing, Bridgeforth. And honestly, I may have been a little too stubborn on some of my, fiat. I thought, as you guys know, I'm not going to go back on what I said earlier. I thought we're going to see another leg up from around 90K. And I still think we're going to see it from here, but I definitely had positions established on the basis of that. And right now, what I'm doing, so guys, when I say that, I think it's a good time to kind of clear our slate. What that means is, you can let some positions ride. If something failed, but it's still valuable. Like, let's say, for example, you have a liquidity pool like I had, where you've got Bitcoin, Ethereum. And of course, that thing is all Ethereum now because we've saw Ethereum lose grounding with respect to Bitcoin for like a month and a half on end and to the tune of like 30% or something. As a result, if you had any kind of concentrated liquidity, you're all Ethereum now. There's nothing wrong with taking that Ethereum. You could leave it in the LP. You could take it out of the LP. That's up to you. But then just throwing it in a different wallet and saying, you know what, I'm going to start over. Now, you could start over and put that towards another strategy. But if you just let it be, instead deploying new capital, it helps you to kind of reset. And I think with the levels so different from what they were in terms of prices relative to Bitcoin, it's a really good time to do that. And what you're going to miss out on if you don't do that, this is why I'm forcing myself to do it. And it's a good feeling actually to take some of those assets that didn't perform well and just put them in a different wallet, especially if you're not spending very much to do it. I mean, right now on the Ethereum mainnet, you can move assets for about 18 cents. So in that sense, it's a really good time to be moving these assets around if that's psychologically helpful to you. And psychology is everything, guys. That's the thing. Like, whether you make money or don't during the next leg up, whether that's this month, 6 months, a year from now, whenever it is, whether you make money or don't, it's going to depend on your mindset that enables you or disables you from taking the right actions relative to where we're at right now. And so what I'm telling you guys, and I'm kind of like telling myself too, is right now is not the time to worry about what we lost yesterday and what our portfolio number says today. Now is the time to dump old strategies off to the side. You could liquidate them, but if getting them out of your wallet is enough, then let that be enough so that you can focus on the most responsible deployment of your next generation of capital.
Right.
And
I actually went so far as to pretty much take my core holding positions and put them into cash, because I believe quite strongly, the same way you do, that we're eventually going to go up. But I think we're going to go kiss 65 on Bitcoin first. And I can now tell you, because I remember this, and anybody that does, this type of work, this following the charts and everything. It's called the Harmonics, and apparently, it turns out that the institutional traders follow Harmonics. So usually a W, for example, is very profitable, but if it's a harmonic W, it's going to go down, and it looks like there's a bunch of harmonic W's potentially forming, and so these guys that have been doing this for 30 years are able to say, look, there's a high chance that we go in here and kiss 65. If we're wrong, there's going to be signals before the big leg up, even though the popular thing in crypto is say, hey, if you're out at any time, you're going to miss one of the 5 critical days and you're never going to profit and all this. But historically, that is not proven to be true if you follow TA. And I don't. However, I'm following guys that do. So if you want to hear the argument for this, listen to the Sunday Broiler Chicken Show, the most recent one from The Rational Investor. And Brian Bemash explains exactly what he's thinking, and it makes a lot of sense. And he'll show you the thumbprints of the institutions. And that's what's different this cycle. We didn't have these huge institutions manipulating things in our prior cycles.
we've been talking about that a bunch, haven't we? And that's the thing, I think I said this a month ago or something. When institutions miss the boat, they bring the boat back, and that's what they're doing right now. And regardless of what happens from here, that is how this period will be viewed. Like, even if we went down, like, let me go more extreme. Let's say we go down to 50,000 a Bitcoin. I've not heard anybody say we're going to there, but let's say we did, okay? Go all the way down to 50,000 a Bitcoin. That isn't obviously going to change anything at all long term. And even if that happened, we would still identify today as a very low, solid entry point, because that flash crash is not going to be actionable for most people, or people are going to be too broke or too paralyzed to execute on it. Okay. And so this is exactly, Bridgeforth, thanks for coming on stage today, because this is exactly what we need to be preparing ourselves for. We need to be preparing ourselves for both scenarios. And so I know that, I mean, maybe you are like completely, cash heavy right now, and that's okay. But I'm sure if you are, that you've got a price you would buy back in at should it reverse on you, or that the guys that you're following do. And then that's fine. I mean, that essentially becomes your strategy then. What I want to say is, if you're not in that position though, and I know we talked about this before, work on that right now, because that's the number one thing. So we've got a lot of different videos out there about spreading out. So if you're too pigeonholed, then spreading out with some new networks, that can help. But if you're too spread, if you're too wide right now, then I got to come up with a name for it, guys, but it's basically a triage strategy where we're like, no, get those assets out of here. You can do it reverse too. If your wallet is secure, just start a brand new wallet and say, I'm starting fresh from here, and worry about that wallet with all the money you didn't make or lost or whatever later on. The great thing about doing that, I've done that multiple times, is that not so much that some of the assets over there come back, they could, but more that your base assets appreciate over time. And so then when you come back later on, you kind of forget that you had so much over there, and then you can deploy it other places later on. And that's okay too. It's like that 1,000 that became 500. You hate it right now because you knew it was 1,000. But if you let that just be, now, granted, if you bought a meme coin for $1,000, it lost 50% of its value, and you haven't already traded it for something more stable, consider that. I mean, think about your portfolio balance here. Do you have hard assets, which could include stablecoin, if you believe some of the things we've been talking about here for right now anyway, could include stablecoin. Make sure that that's your foundation and that you're building up from there. But more importantly, or more to the point right now, you do not want to be in this situation where you are super spread out to the point that you're not even sure, what to care about. And I know that some of us are in that position right now. I was feeling a little bit like that when I realized that one of my test wallets had a potential security issue or real security issue. And then I started to move the funds over. And then I was like, you know what? A lot of these funds I don't even care about. A lot of these funds are from last cycle. I spent $40 on it. Sure, it was up to $1,000 at one point, but I didn't sell it then. And this cycle, I'm learning my lesson. But what do I do with those old assets? Well, let's triage them so that they don't distract our focus. And yeah, any questions on that, guys? Any concerns, other thoughts? We're at just about the last 10 minutes here. So if anybody else has anything to share or discuss, feel free to come up on stage. Looks like we have a decent sized group today. I know our attendance has been a little lighter with these lately, and I think that part of that is because the market's been going the opposite direction of what we like it to, but that can easily turn around. So I want to say I'm super grateful to you hardcores who are here every single week or almost every week whenever you can, because you guys are what makes this Monday stream and the Wednesday stream too worthwhile. So thank you for being here.
I just found the page from Coinbase. I'm going to paste it in the chat.
Beautiful. I love that. I love that. Here we go. Holding USDC. Now this says on Coinbase, but there's probably info in there to hold it on Base as well, on the Base network.
Yeah, it's definitely on the Base network as well as on Coinbase. I would not give Coinbase control of a lot of my money there. I mean, do I think they're going to go under? Probably not, but they can be very difficult.
Somebody's asking.
I like the gas station quote. In other words, I'm violating it right now with Kraken, but a lot of them I don't want to go onto their networks and this and that. So if it's that type of thing, I'll do it. But otherwise, I think that it's like a gas station bathroom. You go in, you do your business, you don't hang around.
That makes sense. That's how I treat central exchanges as well. I mean, I might have $100 on there or something in assets, but not anything really. Now NFT is asking Sonne. Now the one I'm talking about spelled Sonne. Sonne is not related to Sonium. Sonium network recently checked out is completely different. Sonne, which I may have covered in the optimism section of the bull run course, but it would have been a long time ago, guys. And if you're part of that with me, we'll try to follow it together, see if they pay us back something. Since the key is potentially compromised for the address that I'm owed funds on, I've got like an additional layer of complexity that I'm having to deal with on that myself. But that said, we'll figure it out together. All right, guys. So on that note, I see we're a little shorter or a little lighter on time here than normal, but I feel like we've covered everything today. You know, there's a lot of uncertainty right now with the price, but the bottom line is that this period we're in right now is very winnable, so long as you have a conservative, appropriate strategy, given the uncertainty we're seeing right now. Crypto is absolutely going to destroy the stock market once again with respect to its performance. And it's just a matter of time, guys. And that's the reason why we got into trading crypto in the first place, because we believe in this industry. Now, believing in this industry right now may mean covering your own butt, managing your assets, and mostly managing your psychology. Knowing what to focus on so that when we see the next leg up, you're involved with the right things to capture the energy from what other people are participating in as well. Because that's where our returns come from, guys. Other participants in the market. And because we are, of course, in competition with them. And our job as a community is to make sure that we do the best we can for ourselves and the other members of the community. So I'm here for you guys. Reach out to me anytime with questions. If you're concerned about how your portfolio is looking, or you're trying to recover from a hack even, or something like that, I am here to help you. I have lots of videos on different things, and I've also had to deal with just about every single scenario you can imagine myself at one time or another. So looking forward to chatting with you guys more here very soon, and thank you for joining today's Monday community live stream. I'll see all of you guys in the next video.